Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Friday. Happy Friday, March 28th. And so I'm going to go through the usual tickers here. And then I've actually got the chat up, so I'm going to hide that. I'll pop it back up towards the end, maybe take some requests, go over some charts then. But if you're watching this after the fact, let me know a ticker in the comments down below that you'd like me to cover over the weekend. I don't think I should be working, and yeah, I'm trying to get out some more videos this weekend. Just make sure if you do drop a ticker request, do just include a brief description of what you're looking for, or what you're hoping to not happen, something like that. Just give me a little bit. Share your thoughts in the comments down below regarding that stock. But anyways, let's dive into the tickers here, beginning, of course, with the UVIX, which is the 2x long VIX futures ETF. I suspect we might see a little bit of volatility because I believe there is some inflation data coming out in about 4 minutes or so. So I will check over on X to see what that data is. But first, let's dive into the charts. And here, looking at the UVIX, did close yesterday at a price of $31.87, being up $1.69% on the day, and continuing up about 3% in the pre-market, currently trading a little bit below $33 a share. And so if we do look at the chart here, pretty interesting. We do have this gap that was formed following the close on March 21st, that being at a price of $33.36. And so the high yesterday on Thursday was $33.30. So that gap has still yet to be filled. Will it get filled today? I suspect it will, but maybe not. And yeah, I mean, I still do think that this could be heading down to $28 a share. And so for me personally, I don't hold any UVIX right now, but it would be nice to hold a little bit over the weekend. But, I have found in the past, it's always good to be patient for that dip to occur. And so I do have this alert here at $28 a share. I do plan on picking up one share just to hold a little bit over the weekend. I personally don't have a lot of cash on the side, so that's why I'd be going light with that. But what I have found is that UVIX is a pretty good player, even if it's just for a 20% move to the upside. It could be a very nice swing trade from what I've experienced, over the course of, let's say, 3 weeks, taking whatever goes into it by averaging down or whatever to swing for at least 20%. So I do like this one, but it could be taken off. As I did mention, it is around $33 a share. If we do flip over to the 10-minute time frame, we can see that it looks like the market hours trading yesterday on Thursday was up and down throughout the day, and kind of it didn't close flat, but it nearly did, just kind of hanging out around that 786 there at $31.66. In the after hours, stayed kind of flat before going up a little bit before gapping up into the pre-market trading. And it does look like during the pre-market trading session, we have filled that gap at 33.50, but those gaps, I like to look at them on the daily time frame. So if we do look at it over there, that gap has not been filled just yet. Oh, and I should mention the high for the pre-market was $33.50. And if we do pull back over here, it does look like it could be a little bit of a spinning top there, or a little bit of a doji. So maybe that does suggest we will get a reversal, a pullback. And let's see that 786 there is based on this retracement. And so that, is suggesting that could be acting as support on the way down. We did break below it, but maybe that's a fake out breakdown. Or maybe not. Maybe we will be going lower, as we have traded, in this downtrending light blue parallel channel for quite some time. We are above the middle point of it, so I think that there is a lot of downside potential, maybe getting down to let's see, $22 and about 50 cents here, marked by this 786 Fibonacci extension from the moves over here. And let's see, I did also want to consider, before I go over to the VIX, I did want to look at the volume here. So with this spinning top, or this doji that we saw from yesterday on Thursday, the volume here, 5.41 million shares traded, whereas over here, 5.45. So it did come down a little bit, and we did hit a higher high. So that does make me think this is going to roll over and start to go lower. It does look like it is spiking up. It was almost at 33, but it's back at 33 right there, just above the cursor. I don't know if you can see it. Yeah, but then if we do look at the MACD down here, that looks like it has progressively been getting less and less negative. So that does suggest that we could be flipping back over into the green. And the last time we flipped into the green, we did get this nice rally. So maybe we see that, but I do think that there is some more time that could be spent to the downside. RSI, maybe that's starting to head back up, which would suggest the price is going higher. But this bottom here doesn't really seem that strong. The RSI does seem like it could be flattening out, rolling over, and pulling back. So maybe I suspect maybe so, we will be getting a hit of this $28 level. But anyways, flipping over to the VIX, which is, of course, the market volatility index, closed yesterday at a price of $18.69, getting a lot of 69s today so far. So that's maybe some good luck. I don't know. And that went up almost 2% on the day yesterday. Also, it looks like it has a spinning top just like the VIX. However, this is a green spinning top, not really a doji. And so maybe that's suggesting a reversal. But this actually looks a little bit more bearish or bullish, like the VIX could be going higher, which would, regarding the market, be suggesting it's a little bit bearish. Do have the alert here at $20 a share, and we are still trading below that. No pre-market or after hours trading with this one. Also, no volume. Maybe this comes down to this yellow downtrend here as the 786 here. We are above it currently, just like with the UVIX, but maybe we do come down to this downtrend, which would potentially coincide with getting to around $15 a share. And since we are beyond the half hour, I might flip over to X real quick just to see if there is some news regarding that inflation data. So I'm just going to go over to, let's see, my notifications. Did just get one from Gareth Soloway. This is PCE inflation data due out at 8:30 Eastern, and so that happened about 3 minutes ago. No more alerts here from him, but we can just check my feed to see if there's any stuff there. There might also be some garbage, so take it with a grain of salt. Anyways, Gareth says that, forecast is to come in at 2.5%. For year over year, and for month over month is to come in at 0.3%. And so investors want in line or lower than expected inflation. And so that shouldn't be a surprise. But let's go over to here, show these new Bitcoin. We'll go over that. And so from TrendSpider here, we have PCE for, I believe this would be, year over year. This is, 2.5%. And so that is in line with what Gareth was saying. And then core PCE is 2.8%. And that is actually a little bit hot. So let's see. PCE month over month is 0.3, so that is in line with what was expected. So that is good. I should give Zero Hedge a like as well. And then PCE for year over year is 2.5. And then core PCE is 2.8. So yeah, both of those cores are above what was expected. Year over or so not core. I don't really know what the difference is. I think core would be, the stuff that's actually relevant. Those are a little bit higher. So yeah, I think that the UVIX, the volatility could be spiking up because this is looking hot. So yeah, I'm just going to give Zero Hedge a like there. So I am liking the sources. Also, Coin Bureau, maybe want to check those out as well. And there is that. And okay, so maybe I'll like this one as well before getting back to the charts. Personal, that's hot. Personal spending rise is less, so people are spending less, and then real personal spending rises 0.1. Yeah, so that is actually not looking so great. So I would think that the VIX would be going up, but this does not include the pre-market. And so what we're looking at here, yeah, I mean, it's not really, the UVIX, it's not really up that much, but I do suspect we will be getting a gap fill during market hours. So I'm just going to make that a little bit bolder, so I know that, I want to see, does that get filled? But I think this one could be a nice one to hold over the weekend, but you do you. Anyways, let's flip over to the SPY. This is, of course, the S&P 500 tracking ETF, which did close yesterday at a price of $567.08, being down about 0.25%, but in the pre-market going down, more than 0.25% so far. And so with this one, we do have, the same kind of gap here, but this is just to the downside. And so this gap is at around $564. And we are still above that in the pre-market. And it does look like we got this nice little doji here. Did not hit that level during market hours yesterday, as the low was $564.94. Where do I think this could be heading? I do think maybe we could be getting down to like 560 or so if we do see a pullback, but maybe there's some news that, gets this to go volatile to the upside. And so that is, kind of what I expect to be happening, although this does look like a pretty big bear flag. But listening to Tom Lee talk about the markets, he's kind of making the case for there being some potential for this to be a V-shaped recovery. So that makes me think that we could be heading back to all-time highs. But it does look like we got a rejection here, perhaps just below that 50%, 382. Yeah, so maybe I want to remove the 618 and leave the 382 up there. And so we did hit the highs over here. Let's see, I'll just zoom in so it tells us. It looks like the high during market hours was $576.41, and that was hit on, let's see, Tuesday, following this gap up into the trading week. And so actually, we gapped up into this week, and by the end of the week, it looks like we're going to fill that gap. So that's actually kind of, interesting. And so, going from, where we opened, where we gapped up, that represents about a 1% move to the downside. And let's just, considering that, looking at the VIX over here, the UVIX, if we were to go to where we gapped down to on Monday and then getting up to fill that gap, that's about a 7.5% swing to the upside. So that's actually kind of a nice move. So maybe that's something to consider when it does gap up or down, whether that's the UVIX or the SPY. Maybe look for that gap to be filled by the end of the week. So I kind of like that. But anyways, let's oh, sorry, I want to look at the SPY. Let's just kind of consider that volume. The volume did come down yesterday, so maybe that suggests that, we won't be getting a continuation to the downside. But yeah, I mean, I would look for this gap to be filled. And, what I might do is I might just create an alert here for, let's see, 564 to see that go off when we get that gap get filled. That is, of course, approximate, though. At 564, when that gap is more properly at, let's see, didn't I have a gap? Oh, I thought I drew. This is so weird. I drew, yeah, there we go. It's like, what's going on? I drew that line there. So there we do have that line, and that gap, or that blue line, though, is at 563.98, just to be precise about that. But yeah, we do have volume coming down a little bit. Our, let's see, MACD does look like it was less positive yesterday than it was the day before, so maybe it's starting to roll over. This is starting to pull back. I do think we will see that gap get filled. And anyways, over here, looking at the SPX, I should probably, mark that gap over here. And so the closing price from Friday of last week was at a price of $5,667.56 marked correctly there. Just going to make that a dashed line because it's not filled yet. Make it a little bit thicker and make that blue. And that actually does correspond very nicely with this like double top highs over here, being very similar to what we saw in the SPY, but that's actually a little bit lower, coming down to around $558 or around $560. But, thinking about the SPX, which is, of course, the S&P 500 index, this closed yesterday at a price of $5,069 right there again. So maybe that's some good luck. $5,693.31, being down, 1/3%. Pulling back to this gap, maybe we do see a rally into the day. And I am actually just going to flip it back over to this to see if there are any more notifications. Nothing from Gareth Soloway. So I am going to continue on to Bitcoin, which is now currently trading below $85,000. And we have not yet filled that CME gap that was formed following the close on Friday at 5 p.m. Eastern, I believe. And I believe it was 5. We can actually look at this if we look at the hourly. We'll do that in just a minute. But this is trading below $85,000 currently. Got that CME gap marked there in red, dashed line at 84,000. And so maybe that would have been, a nice trade for shorting this, as we are now below this line. So I'm actually going to switch that back to red, suggesting that that is currently acting as resistance. And so we'll have to consider that. And since we are, above this CME gap, maybe I should make that green to reflect that, I think that we will be coming down to that level. And this could continue lower after that. Who knows? But I do have this little doodle of an arrow there suggesting that get filled before maybe going higher or maybe breaking down. But a way to make money on a pullback like this would be by trading BITI, which is ticker symbol BITI. This is the ProShares Short Bitcoin ETF. Closed yesterday at a price of $24.91. And, it's currently trading in the pre-market at around $25.50. Did close the day down 0.6%, but it is up 2.6% in the pre-market. And so that would be to, fill this gap here, the CME gap. That would be, red, suggesting that is resistance. And so from the low that we saw over the course of the week, just out of curiosity, getting up to fill that gap, that's about a 6% move. So it's not, 10%, but it's not nothing. So, that is kind of the idea here, that this would be a nice swing trade. I did not pick up any shares of BITI, but, it is something that I was thinking about to kind of trade, Bitcoin around that CME gap. And then before I forget, I should switch this over to the hourly time frame so we can see where I drew that CME gap. And, it looks like this did get adjusted, but this would have been based on, Friday's close, which would be from, I believe, 5. That would be 5 here. Yeah, so that close was $84,189.27. So that's approximately where I had this line marked. And so 5 p.m. Eastern is what that CME gap is based on. And so I will draw another one of those once we hit 5 p.m. today to see where that CME gap would be. And just thinking about that as being a nice level to trade over the course of a week or two. But now it looks like we are, for Bitcoin, above 85,000. So maybe that CME gap does not get filled, and I should make that line thicker, because that's one we want to be paying attention to. But anyways, Ethereum, switching over to this one, now below $2,000 a share, back towards testing that yellow uptrend, which, if we do switch over to the weekly, is based on these lows. So maybe that is suggesting we're at support. But of course, we can see this green uptrend that's based on this pivot high as well as this pivot low. And, so that's from the highs of June 2019 and the lows of June 2022. That does suggest we could be seeing some further downside to around $1,400 or $1,500. But if we do switch over to the log scale, this is where things get a little bit intriguing. That green line actually looks like it's a level of support, and the upside there getting to a convergence of this top side resistance in red and this lower support here, confluence of those levels where they intersect. That will be around $16,000. So a very massive upside potential for Ethereum. Personally, I'm liking the chart. I am liking it below $2,000. But also not getting too carried away with myself. And so I should note that with Bitcoin, I do a $5 daily DCA. I am considering starting a trade with, Arch Public through Gemini. I did just create a Gemini account yesterday, and then I reached out to Andrew, I forget his last name, who is a founder of Arch Public. I'm not sure exactly, and he sent me this link to learn more about how to use the Arch Public algo in Gemini. And so that will require first I set up a Gemini account and then setting up a TradingView account. And then, so I do have a TradingView account, but I need to get an essential plan, which I think is like $15 a month. And so this would be to trade Bitcoin based on an algorithm. And so this would be just kind of another way to get more exposure to Bitcoin, whether it's for long-term accumulation or for trading for profit. The algorithm would kind of determine that. And so that's something I do plan on covering more in, future videos. But like I said, Bitcoin do a $5 DCA, Ethereum, I do a $10 DCA, but with it now being back below 2,000, I'm kind of considering maybe I want to do, a little bit bigger of a buy, just like a one-time thing while it's below 2,000, because I like ETH, and but anyways, let's move on to the next one on the list, and that is going to, of course, be uranium, ticker symbol URA. This is pulling back now below $24.50, which is, the 786 from over here. I'm actually just going to make sure, did I switch back to the linear scale? Yes. And so, where could this be going? And let's see. So maybe I'm just thinking, how do I want to draw retracement or something? Let's just see. I have on the shorter time frame this looking like 2451 is that 786. Maybe I want to do a shorter time frame Fibonacci retracement here as maybe I just want to delete that doodle, and so we can see where this might be pulling back to. And so going from that low of 22.78 and getting up to the high of 25.78. That's pretty interesting. Just went up exactly $3. But I want to adjust those proportions to just include the 786. That's around 23.42. So that might be, the dip buying level to consider there. And so I'm just going to make that a little bit thicker and make that green. So maybe that is where we are going to be pulling back to, as we did get rejected from that level there. So just like, within this bigger time frame 786, we've got the shorter time frame 786, which would suggest a dip to 23.42. And we can see that yesterday's pullback did come down over 2.5% or 2.5%. Looks like about 2 2/3% down to close at 23.64. Now a little bit lower than that, about 0.25% in the pre-market. But have we hit 23.42 in the pre-market? Let's flip over to the 10-minute time frame. Not just yet. Maybe we do hit that during market hours, as we have hit a low during the pre-market of 23.52. And so, yeah, we'll have to see about that. And so for me personally, I am not trading URA, but I have been picking up some shares of Oklo, ticker symbol OKLO. But rather than diving into that, I will pull up the chat. We do have 10 minutes before the hour. I can maybe take some requests. And so I got a request from Hydro Hustler, I believe. This is a Hydro Hustler swing trader saying good morning. So good morning to you. And with that being said, I'll take a swig of some coffee before it gets too cold. And he is asking for KC long question mark. So I'll add KC up here. And so this is Kingsoft Cloud Holdings. So let's just look at that one. And I have done some retracements here, but they don't look useful. So I'm just going to delete all of my drawings up here. And so just to take a quick look at Hydro Hustler's profile, and so Kingsoft, if I said not the requester, the requested. Kingsoft Cloud Holdings is a China-based company mainly engaged in independent cloud services. So it's a China trade, a little bit risky there, and cloud computer software and services. And so this is has traded or closed yesterday, I should say, at a price of $15.21, being down 2%. And in the pre-market, it's pulling back notably about 4%, down to around $14.58. And so Hydro Hustler is asking if this is a long. And let's see, I'm just curious. The market cap is $3.86 billion, so it's a nicely sized market cap. And so let's just see, looking at this, so we do have lower highs here. What do we have in the RSI? Also lower highs, so there's no bearish divergence. Looking at the lows here, it looks like the low from March 3rd was at a price of $14.59, and we are trading right around there in the pre-market. The low from yesterday was $14.50, so we did take out that low, but it's effectively flat and effectively flat in the RSI, going a little bit lower. They're really both going lower, so there's no bullish divergence there. So that kind of makes me think I don't really like the parallel channel tool here in TradingView because it just extends to infinity, but we can look at this. That makes me think that this is in a parallel channel, and I'm just going to make that be thick so we can see where it's potentially pulling back to. And let's see, I can do a Fibonacci extension. Let's see, I want to do that from this tool. And so just going from that high down to the low here, and then up to this high, a 100% extension would suggest a retest of around, let's see, $12 a share here, that 100% extension, which if you haven't seen me do this before, that 100% extension is effectively just taking the move here and then moving that over to here, and then that you get that same distance move. That's coming down to around 1183, and that would also correspond with getting to the bottom of that channel. So I find that to be pretty compelling. And let's see, that would also correspond with, we want to be looking at, a confluence of levels, a number of levels coming together that would suggest there could be support there because, there might be some bias that like, it was down 2% yesterday and down another 4%. It's a dip buying opportunity. I need to chase it. I need to jump on it. But, that would be chasing. And so that's not necessarily that good. Over here, though, corresponding with around $12 a share, just zooming in on this, we have a high of $12.84. And so maybe that could act as support, but really we start to get into like some meat here. So more volume traded here around like 1137. And so, I could draw a line that corresponds with that. Maybe I should. I'll just do it with, let's see, I'll do it with the high here because then we can see, we go back, that coincides with the candles over here. But it still is, actually, no, maybe I should just do it from the open from this day because I feel like that's really where this is notable. And that's around, let's see, a price of open on that day was 1133, And so that's where I have that marked. And so I'm going to make that line thicker, and I'm going to make that line green because I think that would be, kind of the dip buying level. And also, one thing I don't have it up there, or didn't have it up there, is the moving averages. And let's see, the 200-day moving average, that makes it look kind of bearish. That's around 7. These moving averages up here, we are below them. That's the 50-day in yellow and the 21-day in pink. But yeah, I think that there's just more of a confluence of levels around 12. So I would think personally that this is likely to go lower before it finds a bottom, but maybe it could play with us a little bit between now and then. I don't know that there's going to be any significance to this, but I'm just kind of curious doing this blind to draw a trend line based on the highs from October 3rd to the lows of, let's see, January 23rd. And I'm just going to, make this line thicker, make it yellow because I don't know where this is going to be. It does look like that is kind of, at this intermediate here, and that coinciding with that downtrend, that is going to be around 1239. So yeah, I think a range from around 1250 down to around 1150. That does make me think that would be the really, discounted dip buying opportunity levels because we are currently in the pre-market trading below the low that we have over here, which is at 1459. So I'm actually going to make that line red. And that would make me think that this is kind of, we're going lower than that level. As you can see, the low from yesterday was 1450. I think that is then going to be acting as resistance now. So I would say, look out below. But we also, I should note, do have this gap here based on the close from January 31st. That was at a price of $12.57. So I'm just going to make that dashed line thicker and blue to suggest that there is a gap there, $12.57. So yeah, this is, the range that I would want to be buying if I were to go long. So hopefully that is helpful. Range from around $12.57 down to around $11.33. So hopefully you found that one helpful, but I'm just going to throw this up there because, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this and pre-market prep coverage. There is just about a few minutes before the hour. I'm going to flip over to watch Gareth Soloway on, let's see, I'm just going to go over the channel here so you can see what I will be watching upon the hour. It's going to be Gareth Soloway's game plan here, and then after that I will be watching Scott Melker's channel. He'll be going over the Friday 5 with his friend, which is he uses his initials, I forget his name, and they just chat about the 5 headlines, which will probably include GameStop, I imagine, because of Bitcoin. And I used to cover Richard Newton, or I used to follow or watch Richard Newton's daily videos, but I don't really do that much anymore. And I think that's kind of suggesting bottom territory, less interest in that kind of stuff. So that's kind of a neat way to think about that. But anyways, coming back to my notifications here, just to see another one from Gareth Soloway. And so market slightly disappointed. While PCE, Prosumer Consumption Index, I forget, producer, I forget what PCE stands for. And so month over month came in as expected as 0.3%. And year over year came in at 2.5. So, that's good. However, core was slightly hotter. And that being that I believe year over year came in at 2.8, whereas in month over month came in at 0.4, and so that's core, and so those are the metrics that matter a little bit more, so this is producer, let's see, get on Google, what does PCE stand for? Oops, and I'll go with that, and so PCE, I don't care about PCE. I knew that. Personal consumption expenditures. And so we got that there. And this is from, the AI overview from Google, which I believe would be Gemini. Also, though, from the Bureau of Economic Analysis, or the BEA.gov. And let's just come back to this over here. So yeah, personal spending came in slightly weaker, watching semiconductors today for trading levels. And so, that makes me regret a little bit not going short semiconductors with SOXS, which I talked about a lot about last year, but not so much this year. But anyways, it is hitting the hour, so I'm going to end this stream. Probably won't release a clip later today, but I will try to get out more videos over the course of the weekend. But yeah, hope you guys